New zero tariff and value-added processing rules will turn the island into a gateway for China-ASEAN trade in farm, goods, and raw materials.
On December the 18th, 2025, the Hainan Free Trade Port officially initiated the island-wide independent customs operation, a milestone initiative in China's opening up efforts. Zero tariffs, no tax rates, streamlined tax systems. Behind these policy dividends lies a redefinition of the regional economic landscape for ASEAN countries just across the sea. This means more efficient trade arteries and closer industrial chain collaboration.
ASEAN export will be rerouted through Hainan to enjoy zero tariff and easier entry into China, shifting logistics away from traditional ports. Firms will process, package, and assemble goods in Hainan to reach the 30% value-added threshold before selling them tariff-free across China. This boasts ASEAN export volumes and speed, especially for food, seafood, timber, and crops.
During China's 15th five-year plan period, Hainan Free Trade Port will fully leverage its strategic role as a critical open gateway to become a strategic hub connecting China's vast market with the broader Regional Comprehensive Economic Partnership or RCEP market with ASEAN at its core, a strategic hub for China-ASEAN economic and trade cooperation with the two headquarters bases positioning, and a key hub for China-ASEAN blue economy cooperation centered on fostering a shared broader market.
Hainan's two headquarters bases can become a practical launchpad for Philippine firms into China. It's whether Hainan and the Philippines support institution can provide the compliance, logistic, finance, and market access services that convert policy advantage into real market entry. Why is this attractive? Hainan offers low tariff entry, faster customs, and soft landing before expanding into mainland China. It is best suited for agri-food, seafood, consumer brands, and e-commerce firms that need China-facing operation. What needed to make it work? Philippine companies will need strong on-the-ground support in Hainan, including customs and regulatory help, China standard compliance, cold chain and bonded logistics, cross-border e-commerce setup, payments and trade finances, legal, tax, and IP services, and market intelligence and partner matching.
Pioneering ventures in tourism, healthcare, education, Hainan is transforming from a geographical ferry crossing into a regulatory gateway. To interpret this change, let's listen to the voices from the Philippines.
Hainan's visa-free and FTP policies allow China and the Philippines to build new service corridors, not just for tourists but also for patients, students, and long-stay visitors, not just beaches but also healthcare, education, and wellness economies. If done right, tourism plus wellness and tourism plus education can become the next China-Philippines growth engine. To make this work, both sides need cross-border accreditation, like for example for hospitals and schools, joint venture in Hainan, and digital links like telemedicine or e-learning or payments. Hence, Hainan can be a gateway for high-value services like health and education between China and the Philippines. The Philippines is rich in nickel, a critical input for EV batteries and electronics, but it still exports mostly raw ore, capturing little value. To move up to the value chain, the Philippines must shift into processing, secure Chinese joint ventures and long-term offtake, and build battery and electronic-grade industrial zones. Hainan Free Trade Port can be the bridge. If there would be a low-tariff, flexible hub where Philippines materials meet Chinese battery and EV giants, and hosting processing, research and development, finance and trading before materials flow into the mainland China's factories. Thus, use Hainan to link Philippines minerals with Chinese technology as a raw material supplier